Hello, folks. It's me, your boy. I'm actually going to be using my real voice on this one because as I see a wave of new viewers coming into the channel because I made a AMC video with the Hillary Clinton voice, I actually wanted to take this opportunity to try and hopefully inform a lot of these viewers of relevant, important content that they may not have been aware of before this day and time. Those of you, and I see a lot of new members coming in or new viewers coming in. For those of you who don't know me, I've been in this since the beginning. I used to be an AMC ape. I sold near the top at about $67 or so when the run-up happened in 2021. Been labeled a shill by the Reddit community because I went against the grain and decided to actually learn how financial markets work instead of basically operate off of hopium. But that aside, I've came a long way. Have a great group of supporters behind me, and I'm looking forward to moving forward from here. But I do know my shit. I've read several filings, several documents. I am constantly updating my place of work with more tools as they are developed and continuously evolve over time. And as far as markets are concerned, again, I've done the research, a link of which will be provided to you that you can use at your own discretion. There's much data, spreadsheets, a lot of SEC filings, PDF files, a lot of things that you could find useful if you're into the whole research side of markets. So that will be in the description at the end of this. It contains a multitude of different topics and different material that you can utilize to your advantage. But that being said, let's go ahead and move forward. There are a lot of things going on right now in financial markets. And of those things, a lot of them came out over the weekend. Now, what we saw at the tail end of last week was the bank situation that unfolded at the tail end of the week, right after the testimony from Chairman Powell. But on top of that, we have some new developments over the weekend, which was the Iran lithium situation. We had some brief mention of it on Friday, but there has been deals that have been formed that have been broken for quite some time. For example, China is now brokering deals with Iran, who since up until recently, up until the lithium discovery, they were very hostile towards one another. Same thing with Saudi and Iran as well, who are also in talks of negotiations. So things are getting very interesting. Now, the reason why this is interesting as far as Iran is concerned is because if you think about lithium, what has been the whole thing with the supply chain that's been going on for the last couple of years? It's been, a lot of EV related stuff going on, a lot of battery chip related stuff. And what do you know? Iran finds the lithium, has 10% of the world's deposits, according to the headline. And now we're brokering deals with China. So that is good news for anybody in the EV China stock plays like NEO, things like that. And there's many others as well. LI Auto would be one, for example. But anyways, that is pretty big for the China side of it. And it's also, the timing is impeccable. So we have that. But what the main focal point of this is going to be is the NSCC 2021-803/010 filing that was released last year. It was 369 pages long initially. And basically what it is in a nutshell, it is the execution mechanism for these small to medium players in the markets. That's right. The size of players that you just saw undergo a lot of shit happen last week with these banks. Silicon Valley, to be specific. Now, the thing is that this emergency Fed meeting that's going to be taking place on Monday is going to be the same day that this filing here, NSCC 2021-803/010, is going to be implemented as far as the amendment that got taken to court and it has been approved. And tomorrow is the day that it goes into effect. Now, what is that? Let me show you. Because again, I've done it all. I've been on Reddit. I've written several DD posts on Reddit about AMC, GME, and the markets in general. I did actually cover this filing. This Reddit post was titled the MOAFF, Mother of All Fucking Filings, NSCC 2021-803/010, which is the SFT service, which is the Securities Financing Transaction Service that is going to be implemented tomorrow in full with the new capital charge amendment passed. So again, it is a lot, but if you would like to learn more about it, again, there is a Reddit post on Superstonk that's been up for 2 years and has quite a bit of views. This is back when I was popular, going with the grain for the AMC GME community, but that's neither here nor there. If you would like to learn about it, that is where I would recommend doing so. Or, of course, I will link the source of this filing in the end of this video or in the description below. So we have that. So just think about this. You have the medium small players, right? They're getting basically chopped off. They had their capital requirements increased by a substantial amount. And we can actually go and look at that real quick. Let's go over to the NSCC rulemaking part of the SEC website here. And the one that I was referring to a second ago is this one here, the order approving proposed rule change as modified by amendment numbers 1 and 2 and 3 to revise the excess capital premium charge. This one here is also pretty big. It's the VAR charge. I've covered this on another video. I'll also link that in the description below for you. But the one that I wanted to talk about is in regards to capital requirements. Let's go ahead and let's go to 2022. A lot of these have been pending for a while. Capital premium charge. This initially got drafted in September of last year. And it got initially approved in August of last year. So again, remember, in August is kind of when everything fell off of a cliff and we didn't recover until that was October lows. But this stuff matters, man. These filings, especially the ones that get taken to court. So I would definitely recommend looking into that and learning a little bit more about it. Yeah, I'm not seeing the capital requirements. It may be on the DTC website because it's a pretty big one. Usually the bigger ones get posted here first. But I was going to show you some comments on this filing because the industry members, the small to medium players, are furious about these enhancements. It must have been a while ago. It's been longer than I thought. Not on this page. Wow, there's no way it's that far back, is it? Oh wow. They've been at work, man. I'm telling you, they've been at work with these filings. I'm not seeing that capital enhancements. Basically, what they've done is they've increased the capital requirements for their margin accounts or their margin volatility requirements to the point of almost 1,000% for some of these medium players, which means, and this is where this new filing or the one that's been pending for a while with the new amendment, the SFT service capital charge amendment, this is where this comes into play. Because basically, the SFT service is literally designed to catch the assets of a defaulting mid to small size player. So the fact that we just had one of those nearly happen on Friday, right before this implementation of this on Monday, is very telling in my opinion. I am stumped as to where that filing is. Did they remove it from this website? They often do that, but yeah, I'm not seeing it on here. Interesting. Let's Google search it. Increase capital requirements. Oh, it was a while back. Okay, yeah, this was, man, time flies. That was all the way back in August. So think about this also. It all ties in. That's what I'm trying to get you to understand is that, I've looked into so much of this that you see one thing happen and you remember and a light turns on for another piece of the puzzle and then it all just connects and there is no coincidences because you had this here approved on August 26, 2022, but yet the excess capital charge, the one that we're also talking about here, that one did not. That one, they filed an amendment and took it to court. And then this one here, same scenario. So again, they weren't ready back then. But the comment letters here are furious. I'm going to read a couple of those and I'll let you go. But I just want to let you know about some of these updates because they are relevant and important. Those of you who are maybe in China plays, it has a very strong growth trajectory for the next few years and then some. But the immediate future, is going to be telling because, again, if you look at the markets right now, the state of the markets, everything's oversold. I'm thinking we're going to see one more upside move across the board until things kind of separate and go their own way. But we'll have to wait and see. It all depends on how the next few weeks go and how this FOMC meeting goes. So let's type this in comments. And you can get a lot of information just by going through and reading some of these comments to these SEC filings. This one here, let's see, this is from Vanessa, that's just the secretary. This is Scott G. Monson, attorney at law. He is he's representing an introducing broker-dealer, so basically a new participant that's in the system trying to make something for themselves. He represents an introducing broker, which provides broker services in large part to holders of a micro-cap or over-the-counter stock, so trading OTC, and a stock transfer agency, which maintains records for many issuers of micro-cap or OTC stocks. So that's who he's representing. He's submitting this comment letter in response to NSCC's proposed rule change, seeking extraordinary, because it is, increased capital requirements for its broker-dealer members. They're saying that if it's implemented, it would have the direct effect of eliminating small clearing firms, especially those that service emerging markets. Now, emerging markets, things like China, India, the not-so-established markets, the fact is, just think about this. Think about the size of China, the amount of population they have, and just think about the fact that they're considered an emerging market. That right there should get you jacked on China. But they're saying, basically, in a nutshell, is that if they were to pass this, which they already have, this was written in February of this year, if it were to be approved, it would eliminate the smaller broker-dealers from the industry, because that's exactly what it's designed to do. Its implementation will also adversely affect broker-dealers and transfer agents. So again, those of you that are in ComputerShare, you might want to at least take a look at some of the facts behind what you're doing, because it would be a very unfortunate situation for something out of your control to happen and you have no options. But anyways, its implementation will also adversely affect broker-dealers and transfer agents, which provide brokerage services, emerging public companies, and the public who invest in these growing startups. So again, they're outraged, and this is not the only one. There's a lot of them. So this one here is basically saying, hey, you're about to take out these smaller to medium-sized players. This one here, Securities Traders Association of New York, on behalf of the members of the Security Traders Association of New York, we submit the following comments in response to the National Securities Clearing Corporation's proposed rule change, captioned above, seeking to impasse as much as tenfold increase to capital requirements for its broker-dealer members. That is insane. Stanny respectfully urges the Securities Exchange Commission to not approve the proposed rule, which they already have approved at the time of this filing, which was January 27th, 2022, exactly 1 year after the whole GME events happened in early January. The proposal seeks to impose an increase on broker-dealers, applicants, or members' capital requirements of between 200 and 1,000%. The excess net capital requirements, i.e. capital in excess of the minimum net capital required by the Commission, or such higher minimum capital required by its designated examining authority for self-clearing broker-dealers, would increase from 500,000 to as much as 5 million. And for broker-dealers who clear for others, excess net capital requirements would increase from 1 million to 10 million. So without saying anything else, just take what I've said so far, and now we're going to pivot from this NSCC 801 that's going into effect Monday. We're going to pivot from this, and we're going to go back to the excess premium capital charge, right? Because this is already approved. These effects here, this will go into effect August. That's when the full implementation is going to be done for the capital requirements. But what's happening tomorrow is the SFT excess capital premium charge. So what did you just read about excess capital? The excess net capital requirements in excess would increase from 500 to as much as 5 million. So with that in mind, now tomorrow we have the excess capital premium charge going into effect. So let's go ahead and look at that real quick, and then I will let you go. But again, just the fact that not only is that going into effect Monday, but look what just happened last Friday and Thursday with the banks, And then look what the Fed's doing. There's an emergency meeting. And by the way, they've already came out and said, I already got emails that basically give you some insight as to what's going on. Let's take a look. That's Gary Gensler, my bad. Let's do Federal Reserve Board announces it will make available additional funding to eligible depository institutions to help assure banks have the ability to meet the needs of all their depositors. So, to support American business and households, the Fed Reserve Board on Sunday announced it will make available additional funding to eligible depository institutions to help assure banks have the ability to meet the needs of all their depositors. This seems very, very, very 2020-like when they implemented all of this crazy stuff right before the end of the month in March when the first quarter turns over. And then in April, everything just pamped for a year until 2021. But yeah, man, I mean, these things are planned. And, I don't think there's any coincidences here with the fact that we just saw a bunch of banks who are medium-sized players go and basically get the shaft right here before the SFT to catch all their assets goes into effect. And for anyone that just wants a brief TLDR on the SFT, two things. It's designed specifically for two things. Number one, to prevent or mitigate, not prevent, sorry, to mitigate the effects of fire sale in financial markets. And the second one is to prevent liquidity drain, which could arise in the event of a defaulting member. So what are they doing in essence? They are preparing themselves for the slaughter and evisceration of these smaller to medium-sized players, which you've already seen happen. But the thing is, don't think it's anything. Basically, there's no doom and gloom here. This is all part of the plan, in my opinion, based on what I've read from these very entities. So again, for the new wave of viewers coming in, I know I may seem like a troll, but I'm actually very, very serious about financial markets and where they're headed. I'm a very avid researcher into this stuff. So, I mean, I'm just passionate about it. So again, I felt this would be something relevant and useful to bring to your attention, and hopefully you learned something here. But yeah, big things happening over the weekend. Iran, China, lithium, the bank situation, Fed bailout already set in stone. So it's going to be an interesting week. We'll have to wait and see what happens. We have some data coming out this week too. Got some CPI and some fun things like that. So stay alert and stay smart, people.